Hi, Dominique, and welcome to another edition of The Week Ahead. I'm happy I'm back, survived what I was out for. How
Yes,
are you doing?
Andrew, I've always said sports are dangerous to your health.
I wish it was.
Actually, I'm a sport fanatic myself. So,
Okay, let's kind of dive right in. Obviously, there's a lot of news today, so timestamp. It's about 4 p.m. London time on Friday, June 13th. Obviously, there's geopolitical stuff going on, but we had a lot of data this week. So let's kind of start with there. What's your big takeaways? Surprised by market reactions? Um, does this change your call on anything? Yeah, let's start from there, I guess.
so um, the data doesn't change my broad call, which is that we have a slowdown that's helping to keep inflation contained. So you can see that in the CPI. What's interesting about inflation is if you look at inflation surprising, this is people have really overestimated the impact of the tariff. As Sam's model had predicted,
Mhm.
the CPI surprised on the downside. You look at goods, you see a tiny little bit of an impact of the tariff. For instance, electronics prices, consumer electronics prices are already falling, now they are flat. But overall, there was almost no goods price inflation. You look at the price of non-tariffed goods like used car, perfect example, it's falling. And services prices, once again, inflation was very low because airlines are continuing to reduce airfares. It's a really good time to fly. Airfares are down 13% relative to the end of last year. And that's because you have a decline in passenger number, so soft demand. So you look at the CPI, you're not seeing second-hand effects. Any impact of the tariff is confined to tariff goods, and it's very small. And then we had another piece of important data. Usually no one pays attention, but now they are going to pay a lot of attention, and that's the unemployment claims.
I saw, yeah.
Continuing claims are really moving up. And I think it shows the data we got on Friday, the NFP. The data was flowed. I highlighted that the households survey showed a huge decrease in both employment and the labor force, so labor demand and labor supply, 600,000. And I think the unemployment rate we got, which was unchanged, I think it's an underestimate because we saw a clear increase in claims, and claims tend to be less volatile than overall unemployment. But the database is more reliable for claims because it's basically people who are getting money as opposed to the household survey. And I suspect that comes the next NFP, we are going to see the unemployment rate revised up. So in terms of broad picture, it didn't change anything. However, in terms of my expectation for the FOMC, for editorial reason, I published my preview before the CPI and before the jobless claims. And
Yeah.
so on that basis, I thought there would be a tweak in the dot where we would have only one cut this year and then three next year. Um, and based on the data we have, I think we're more likely to have two dots, so unchanged dot. But I think
Yep.
the macro scenario is going to show higher inflation and higher unemployment at the end of this year, so Q4. But
Okay, so they'll announce inflation and unemployment and
higher, yeah.
yeah.
But coming down next year and going back to the pre-tariff trajectory. So the data is proceeding as I expected. Obviously, there are the issues in the Middle East with potentially a lasting increase in oil prices. We don't know. previous, episodes of tensions in the Middle East have seen a big short-term increase and then normalization, and that's what the data is showing. Viresh has a detailed analysis,
Yeah.
so
So that's
that's
definitely open.
probably a good best case scenario. In terms of the Fed, I don't see them changing their view because of the Middle East escalation. I think they will say this is just adding to the uncertainty. So we need to wait and see, wait and see. So that's my broad take on what's happened this week.
And for the Fed, would they, do you think they're going to signal when they are considering moving, or they'll leave that opaque? Like, would they signal September is in play and
So I don't think they are going to signal a specific month, but I think what they are going to say, they are going to repeat what Cleveland Fed President Hammack has been saying, that the Fed is going to wait and be reactive, but once it moves, it could move hard. So I expect them to hint more at that than a specific month. And if I'm wrong and they hint to a specific month, I would likely hint more at September than July. But it's a bit inconsistent to claim that uncertainty is unusually high and then give a specific date on when you are going to ease. So I think it's more a case of them stressing what Hammack has been saying, which is really common sense.
yeah, yeah. Okay, okay, that's great.
So
Market
for next
pricing,
week,
everything. Yeah.
so
Sorry.
for next week, besides the Fed, we have two data points. One is retail sales. And to be honest, I find the consensus there a little bit on the optimistic side. They think the control group, which excludes the more volatile categories, could go up by 30 basis points following last month contraction, 20 basis points. I think it could be lower because what we are seeing in the import data and also in the Chinese export to the US data, we're seeing contraction. And what's been going on is that February, March, April, we've had a huge increase. People are trying to
Yeah. Front
uh,
run. Yeah.
front run the tariff, actually up to April. But I think now imports are falling, and so that suggests consumption of goods, durable goods, could be falling as well. So that 30 basis points seems to me a little over on the optimistic side, but let's see. Otherwise, the big data, I think, is a continuing claims suddenly
Yeah.
becomes a star. There is no survey yet posted on Bloomberg, but I suspect consensus is going to expect a move higher. I mean, the economy is softening, so it would make sense.
So it's like weekly claims. So it's a weekly um data reporting. So weekly
Exactly.
event. Yeah.
And
Yeah.
it's
I
a
don't think Sam does it, but maybe that's something we should look into. I'm in your
definitely.
camp. Yeah.
Definitely, especially since it's a higher quality series than the household survey data, which really has a lot of issues. This one, it's
Seasonality.
people
Yeah. Yeah.
who actually draw money. So your taxpayer money and mine are being, you dispensed carefully. So we can assume the quality of the series is high.
Yeah. Okay. Anything else for next week, I guess? Have
I
this.
mean, these are the main events on the calendar. Obviously, the resolution of the Middle East conflict
Yeah.
is going to be front and center.
And in general, I'm just looking at our event monitor. We have the forecast or had. as more on the dovish side. Do you agree with that versus generally what consensus is?
So I agree. I think the consensus has overestimated. So yeah, the consensus was too pessimistic in my view for two reasons. The first reason, the administration is doing very unconventional things. It's really launching also a frontal attack on the establishment, and so I think they are getting a lot of negative, there is a negative bias against the administration policies in the media. Also, the way we've been trained to think about economics, they are doing the opposite. So I think definitely that there is that bias. Then the other bias that is in the consensus, in my view, is that people are underestimating the negative impact of the policy uncertainty. I mean, businesses are really worried. They are postponing spending. Same thing with consumer. You can see the savings rate, the personal savings rate going up. That's impacting demand. And so firms are very skittish about raising prices, because they can feel that demand is softening. So I
That was
agree.
the surprise part.
Yeah.
Yeah, that people would just, I think most people assume business would just look to pass on the higher rates, but in fact, businesses are more concerned, consumers are more concerned. So businesses are feeling we may not have the pricing power that we thought, and we'd rather actually make sure that we're selling our goods.
Absolutely. And on top of that, put yourself in the shoes of a CEO who has to decide on billions of investment in a new facilities. Would you not wait a few months to see if the coast is clear rather than commit right now? I think you would.
I feel like it's like on things like steel and aluminum, those kind of things, more on the commodity side, more the commodity producing, where you just don't know. And like, why would you want to make a purchase now? Well, you just raise it up to 50, 50% on steel as a steel and aluminum. And you say, okay, well, let's short term, let's make very small purchases domestically and let's see, but we know we can't, it won't fill what we need. I'm just thinking through, as an example. Um, China goods, I'm sure that businesses are looking for alternatives or ways around it now. They're like, whatever that is, that's obviously a huge part of the imports. Okay, very interesting. I'm just looking at this. I don't know if you looked at the Fed day on the event monitor. Um, I'll just share my screen for a second. Uh, Hopefully, I think people have seen this. This is kind of our new update on our event monitor. Um, I'm just looking through because normally we have you click here. This is for dollar yen, and then this shows the day weight for the day, which is actually not that huge for Fed, and it's basically signaling in our view of it potentially we're expecting to be. We only have dovish or hawkish here, more on the dovish side from the statistical work that you guys have all done. So, but here the interesting thing is looking at which pairs are expected to move off a dovish reading. Obviously, in most cases, Dalian, this would show the direction of the likelihood of if the Fed is dovish, which way dollar yen would move. This is something we just added. We want to expand on. In this case, it dollar yen down. For most cases, it would be a weaker dollar. And then if I look at the multi-asset view, it shows in things like Kiwi, Aussie, CAD, MEX, even Euro, that the market's pricing this to be a very small market moving event where our model is saying that in these currency pairs, certainly in a lot of dollar-based currency pairs, that the market's probably underpricing that. I kind of think after some weak job numbers, or continuing claims numbers and the weaker CPI, I actually think this could be one of the more interesting meetings we've had in a while. Obviously, they're not going to cut, but just how everything goes there, and obviously or saying here things like the euro cross is obviously it's going to be a dollar move. So I just thought that was quite interesting.
Oh,
Uh,
definitely. But in terms of Fed, President Moussalem, St. Louis Fed President Moussalem, he's been very explicit on a sort of on the Trump factor. He just before the start of the blackout, the pre-meeting blackout period, he gave an interview to the Financial Times where he said very clearly that political interference is making it more difficult for the Fed to cut because there is a risk it undermines the credibility of the Fed, which would lead to the potentially to the de-anchoring of long-term inflation expectations. That's Moussalem speaking, not me. And for central bankers, that is like the ultimate sin or sign of poor performance. So I think the Fed is going to stay reactive, not just because of the unusual uncertainty, but because of this political factor. So for the administration, actually, the best strategy would be to say nothing because the data speaks for itself.
yeah, I think this was a perfect opportunity for the administration not to say anything. You got some questionable, numbers around employment, and then you got some pretty soft inflation. Just leave it. They could have then say, okay, this stuff is a little bit concerning, or opening us, giving us an opportunity to really consider um, potentially moving in the near future, whatever it is. But coming out saying, oh, you need to cut 100 basis points, was it? I can see that wasn't. But like at the end of the day, they need to do what they think is right too, and
100%.
they they shouldn't be bullied into not doing something, and they shouldn't be looking silly and questionable into not doing something the other way. Like that part, I kind of, you know, I mean, my background is more trading and sales than economics and policy, but that I think is kind of a weak comment by that governor, because there looks like some data now that a 25 basis point cut at a minimum may not be a bad idea. Um,
So I agree. And I think all
yeah,
it will end up
we both
doing,
are. Yeah, we both are. We
yeah,
were saying they should have considered in June. They should have considered this one. Like,
yeah, but as I always say, my job is not to tell the Fed what to do, but explain to the best of my ability to our clients what the Fed is likely to do. So we'll
yes,
see. But eventually,
amazing.
the data will push them to cut. I mean, it's
Yeah.
just a matter of time.
Okay, cool. Well, have an awesome weekend. It's very warm here. My son's going crazy downstairs, so I wish everyone a great weekend and speak early next week.
Likewise, Andrew, take care.